Hey traders, this is Ron Haidt at Market Tamer. Happy Tuesday. Hope you're having a great day. As always, nothing in this presentation shall constitute a recommendation to buy or sell any security. Trading stocks and options involves risk, and specific financial issues should always be addressed with your financial advisor. We'll kick off here with the IWM. The small and mid caps had a tough day today. The IWM, which are your small caps, lost 1.07%. Volume did pick up a bit, and we have bearish engulfing again. We had bearish engulfing the beginning of July. We had bearish engulfing the middle of June. So this level right around this 168 to 170 area continues to be overhead resistance. What that means is when or if we actually close above it, close near the highs of the day, as long as volume's half decent, let's say just average or better, that's a pretty strong breakout. This would still be considered consolidation. So I could consider potentially bear calls up here, but boy, oh boy, if I would get a close above these highs, I'd have to run from that trade pretty quickly or look to adjust it. Now, if we look at the mid caps, 6-month chart, they also had some bearish engulfing. They've been stuck up around this 365 area. They did get above it back on July 9th, tried to get back up there just 4 trading days ago, which would have been Thursday, and now we're coming lower. So they're still in a trading range too. Looking at the Qs, just like Google, they came off their highs, but they still remain bullish. Look at the diamonds, the DIA. You can see they bounced up a little bit today, about 0.75%, still range bound, but we put in a little bit of a higher low. That's a good sign. However, we still have to break out. Then SPY, which is something that I have a long-term bullish position in, they just gave us a doji today. They gapped higher and then closed right where they finished. We're still flirting with those all-time highs. Taking a look at PM, which is Philip Morris, we're getting closer and closer to even stretching further above $85 here. I would still consider this breaking out as of 7/20's earnings report, which would have been Friday. Now we're just having inside days, but if I wanted to play a little more safe, a close above the close from 7/20, so something above 84.31, which is why I'm saying 85 bucks. Big upside potential here in PM, so I'm going to watch that one. Here's Harley Davidson. There's talk about tariffs and shipping jobs overseas and all that. Everybody can have an opinion on it. I just like money better. So you can sort of put your fingers in your ears about all that stuff and just trade what you see, not what you think. Nice volume move today. You can see the earnings report came out this morning. Gapped higher, closed near the highs of the day. However, we were stopped cold at the 200-day moving average, just pretty much like we were over here. Got above it a little bit, then got right back below it and just couldn't punch through. Now, the 200-day in purple is an institutional moving average, 200 days. A close above it is viewed as bullish. When you're below it, it's viewed as not bullish. So I want to get over the 200-day, but trust but verify. I also want to close above the 615, which is 45.94. Let's round it up and say 46 bucks. Above 46 bucks, target, gap fill up in the low 50s. So that could be interesting. Some Bitcoin or blockchain related stocks did well. RIOT is one we've looked at in the past. We're now seeing big spikes in volume. We have a little bit of a mini bull flag here. It's popping up. I'd like to see it get over this high, but you could say target's up at 1750. That is pretty amazing. So I would consider something like maybe an 8-day EMA or a 20-day EMA in red as a potential trailing stop. Whirlpool got rocked by earnings today. Talk about taking it on the chin, 14.52%. In fact, I have to go back to 5 years for looking at Whirlpool. The 2016 lows around 120. That's only $8 more, And then there's some more lows back in 14. Below that, that is not looking good at all. So keep an eye on WHR. It's one more reason why, earnings reports, I think, if I'm a shareholder, they need protective puts to save capital. Here is XLP, which is the Staples ETF. We're still knocking on the door at the 200-day. We need to close above it on decent volume. I do like OBV right now, but we're just not getting the breakout, going back to March. And last but not least is MELI. I want to bring this one in because this stock went on a run. I mean, once it closed above the 200-day, it was game on. The blue line on my chart is the 5-day EMA. The 8-day EMA is another very common and I think a good potential trailing stop. It's below the 8-day, so to me, anything short-term here below the 5 or below the 8, the short-term momentum trade's over. Right now, the target would be the 20-day EMA, even the 200-day testing the old breakout. But this was a really amazing 50-point plus move here on MELI. All right, wish you guys a fantastic rest of the week. I'll see you tomorrow in the next video. Take good care.